Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up on this extra lovely day. It really was an extra lovely day, and we're going to talk about why this was an extra freaking lovely day. Thursday, March 29th, 2018. Okay, so why was this an extra lovely day? All right, stocks rallied across the board. Dow Jones Industrial Average put on about 300 points. It was up almost 500 at one point. Now, why did that happen? Why did this? Is it because stocks are just undervalued? Is it because the market just sold off a lot over the past several days? No. The reason is pretty simple. And it's pretty straightforward, and I am not kidding. People, don't take my word for what I'm about to tell you. I want you to see this for yourself if you have not already. We're talking, and I know I joke about this all the time, but today was almost beyond belief. We're talking bond buying like these were the last bonds to be had in the history of the world. That is what pushed stocks higher today. We didn't just have a little bit of bond buying. So much cash went into the bond market today that the 10-year yield dropped yet again and is 2.74. Now, think about why this is so profound in the face of everything that's going on here. Despite the fact that the Federal Reserve is raising rates, we've seen rates drop ever since they were talking about it. Okay? No, ever since that day, rates have gone lower. It's unbelievable. Bond yields continue to drop. That is why stocks rallied today. There is nowhere else, and this is being done on purpose, nowhere else for an investor to go, well, let's put that into perspective as well. Do you want to, what kind of a person would want to hold a bond in this environment? Nobody. Nobody would want to hold a bond here. You're going to lock up cash for 10 years plus that is earning less than the actual rate of inflation. Or you could take the same amount of money and throw that into the stock market and make obscene amounts of money in a short period of time. So we know who's doing this. This is not being done. This is the banks. This is the Federal Reserve. This is other world central banks. It has to be, because nobody else would buy a bond here. And again, they will not allow the bond market to do its one and only job, and that is to determine fair value. Not only that, they will not allow bond yields to rise at all, despite the fact that the Fed is raising rates. Think about how insane this is. So, you cannot be in a bond. They do not want you in cryptocurrency. You see what they're doing to that lately? Just like gold and silver, they're making sure they put pressure on these things. They do not want you in cryptos. They do not want you in gold and silver. Where you want to be? You want to be in the dollar? The dollar is a dying asset for the longest time, so you can't be in the dollar either. You want to be in euros? That's another dying asset. So the only place you can go, an investor can go here, is the stock market, and that is what pushed up stocks today. There's just simply nowhere else to go. Not that stocks are fairly valued. They're not fairly valued, and everybody knows it. Even the Confederacy of freaking dunces, you watch them, and they got people on there. There's some guy out there today talking about stock market valuations, how they're just utterly insane. Yeah, bravo to you, sir. You got it, but it doesn't matter. This is the land of make-believe. I'm almost speechless. I really am. Before I become absolutely mute, because I am going to be speechless here, I did open up this position, believe it or not. Why would Greg do this? Well, probably number one, because I'm losing my mind. Number two is after today, yet again, you know what? I have to get like smacked across the face once in a while and say, Greg, wake up. this is a fake market and they're going to make sure that the stocks rise. Look what they did to the bond market today. Don't take my word for it. Please go look for the chart. Look at, see, I'm getting a little tongue twisted, at the chart on my website, traderschoice.net. There's a link in the description of this video. You just won't believe it. And wear like 3 or 4 pairs of sunglasses, or maybe a welder's mask or 2, because your eyeballs will explode. It's incredible. When world central banks, when the Federal Reserve is unable to raise rates because the market continues to go against what the Fed is doing, there's a problem. And this yield curve keeps getting flatter because cash keeps pouring into the bond market like this, there's a problem. So we had a massive rally today in the bond market, which sparked the stock market rally because there's nowhere else to go. That's why I opened up this position here. This is a small initial position. It ended up positive for the day. Not much, a little bit. If this continues, and let me ask you seriously, do any of you believe that after seeing what happened today in the bond market that anything is going to change? Bond yields are probably going to go even lower than they are. So they're going to make sure that there's nowhere else to go but back into risk assets. Stocks. So simple. Anyway, I know I'm making a joke about it. I could be wrong, and this position could completely reverse. That's why it's an initial small position. We'll see what happens come Monday. If stocks go off to the races, if bonds continue to rally and yields drop, well, that's where we got to be. There's just frankly nowhere else to go at this point. Okay. Thanks for letting me get that off my chest. All right, with that said, this is a 3-day weekend. Tomorrow is Good Friday. Happy Easter to all of you out here. So look, I'm just going to leave you with my famous last words here. Just forget about all this stuff for the weekend. Enjoy yourselves. Love each other. Care about each other. And be charitable. So important. And we will reconvene. We will reconvene right here on Monday morning. And I have no doubt that it's going to be fun. I will see you then. Bye.